Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video. If you guys are brand new, this is a video I do on YouTube each and every week where I walk you through the markets and share a few of the top trading opportunities that are on my radar for the week ahead, along with a sprinkle of trading lessons meant to help you progress through your trading journey. This week, we have about 8 new trading opportunities that I want to look at, and they come from really all over the place. We're going to touch on a lot of different markets and a lot of different opportunities as well. Everything from advanced pattern formations to classic trend continuation patterns. And we've got some breakouts on the radar as well that are just about ready to explode. So we want to keep an eye on them. So grab your notebook or load up your notes app and get ready to learn. And oh yeah, this was a suggestion from one of you guys earlier in the year when I did the first Trading Edge video about how to use this video to the best of its usage. Here's what you should do. You should load up a chart. You should follow along and play the game of when Akil gets to the next chart, pause the video, look at your chart, and see if you can guess what I'm going to take a look at. Again, it's a fun game to play. It's great for training, and it's one of the best ways to use this video for educational purposes. Now, before we hop in, not a shameless plug, not yet. I may do one of those later if I remember to, but I just want to give you a little bit of an update on how my trading week has gone and how my trading year has gone. Last week, I took 2 trades, 1 win, 1 loss. This week, 2 trades, 1 win, 1 loss. So I am exactly at break even win percentage wise, and I'm actually exactly at break even. I guess technically I'm negative 0.01% in the red because of spreads and commissions, but I'm going to call it break even for the year as well. Now, what made this week interesting was that I had 2 trades that involved active trade management, and 1 hurt me and 1 helped me. So there was a winning trade where I actually had to roll my profits to a lesser level than what they were originally at. So I made less than expected on that trade. It's better than a loss, but I made less than expected on that trade. However, in that dollar-yen trade that I shared with you a few videos ago here on YouTube, which ended up losing, by the way, but as I mentioned, I was able to roll stops up on that trade, so I only took about, honestly, less than half of my original planned risk. So with all that being said, if this were a boxing match, after 2 rounds of fighting and duking it out, it's a stalemate, it's a draw, and hey, that's trading. It is a battle. You survive, you survive, you survive, and then boom, you have a heater, and then you go back to surviving again. And well, speaking of the yen, let's get started on the yen, or at least the yen-related pair. Let me switch cameras around so I can see my charts, and we'll get into it. All right, so we're going to start here on the Nikkei, and as you can see, price action has made some all-time highs, followed by a very tight range of consolidation. We call this a high and tight flag. It is one of the best breakout patterns that you can have in the market. Now, not to get too deep down the Japanese rabbit hole, but there is a lot going on. There is that verbal intervention that is happening, again, that has always been happening, but it's ramped up this past week. And then there's also this political puppet play that's happening as well. And long story short, you can go research it if you want, but this has all been affecting the yen. From a technical perspective, here's what we have though, right? We have a higher high, higher close, which allows us to make the prediction that price is likely to continue higher. And what I want to do is I want to zoom in from the daily chart down to a lower time frame at this tight consolidation area and see if it offers any opportunity. So as we go down to the 4-hour, you're going to see the nice little channel that we had here. We had a lot of divergence here on the RSI, right? Price action gave us a little bit of an exhaustion pattern. But what's interesting enough is that we are trading right near the low of that zone. Now, for you guys that were in the live room this week, and remember our lessons on elephants. Yes, we did a national, there we go, geographic lesson in the live room this week, where we spoke about elephant candles and the ranges that are important around them. Yep, we have said elephant right here. Noise, right? And we are right at the lows. We also have some pretty cool clues by the wicks at these candles, right? We see price pushing down, bullish rejection, price pushing down, bullish rejection all over this zone. Now, I don't know if price is going to hold this zone. And full disclaimer, I don't know anything, right? Who knows what the market is going to do? The market could do whatever the hell it wants whenever it wants to. And if anyone on the internet or one of these trading videos ever tells you different, they are lying to you. Is this the right way? I don't know. Everything's backwards on camera. Anyway, don't believe them. But What I would say is this. If you are someone who is interested in being long the Nikkei, this is probably going to be the best first opportunity to get involved. I'll tell you why. Because if we are wrong, we know where we are wrong at, right? Right below this line. So if you look at where you can enter and you look at the risk that you have to take and you look at the reward that you can get, not just to retest previous structure highs, but to break out and push higher, it's a really good potential trading opportunity. Now, if we do break that level, then we just reset, right? Guess what? If you're a trend continuation trader, you're going to have to swing sometimes. You're going to have to miss sometimes. You're going to have to get right back into that batter's box and swing again. So if we were to break below that level, my next expected level to go to would be down here. And that can offer actually a counter trend or a bearish play as well. But we can worry about that next week. The point is, if you're looking to get long in this area, I think this is, or if you're looking to get long the Nikkei, I should say, I think this is a great level to set your longs up at. And, well, see if you can load yourself up before the explosion happens. But remember, lots of political stuff happening in the background, so just keep that on your radar as well. Now, speaking of breakouts, we have another potential breakout here on the dollar Canada. Similar situation. It's a little bit more choppy than the Nikkei, but same type of concept. So let's start with the very first process of our process, Let's start with the very first part of our process, IPDE. Identify, predict, decide, execute. And let's identify what the loonie is doing here. If I draw a line at our previous structure highs, this nice little pattern formation right there, you're going to see that we had a break and a close above that level. Now, again, if we have a break and a close above, that allows me to make the prediction that price is likely to go higher. The next part of my prediction is if price is likely to go higher, then where is price likely to go higher to? And this is where I want to look left. Structure leaves clues. So we see that our white line is the level that we currently broke. And we've got an interesting little consolidative level right here, right? We've got this nice little descending triangle, my favorite pattern. I know I say it every time, but it hasn't changed. It's still my favorite pattern. These things are awesome and they're so easy to trade. The question is, where within this descending triangle are we going to retrace to? And the initial level for me stands out right here. Again, looking at the zone right before this breakout, right before that elephant candle, doing the thing again, right? That is the zone that stands out for me. But if I want more information, maybe I want some more confluence, what I want to do is I want to take my volume profile tool, the anchor or the fixed volume profile tool. Now, before you start asking questions, if you don't know about this tool, there is a video here on my YouTube channel. I will link it at the end as well, walking you through what the tool is, how to use the tool, how to change up the settings and all that fun stuff. So before you type that in your in the comment section, go back and watch that video. But I'm going to take my volume profile tool from this swing high to this swing low, and I want to see where the spikes in volume are at, specifically above the level that I'm looking at. So we can see that we are existing in the void right here. It makes me chuckle every time I hear that, because I've been watching so much stuff on like Marvel and getting ready for Doomsday, and we're talking about the void and what part of the movie takes place in the void and all this fun stuff. But in trading perspective, the void is like an uncrowded highway, meaning that there's no traffic, there's nothing really stopping you from going, and we would expect that price moves through the void to the next high volume level. And if I drag my box out just a little bit to the right, and if I delete that annoying line that I just drew in, you'll see that volume starts to pick up once again right at that level. So there is a little bit more room to go higher here on dollar Canada, which means this potential trend continuation breakout trade does have some legs to it. So let's go down one more time frame to the 4 hour where we can get a clearer view of this. And you can see that we had a loss of momentum moving up, and now we're starting to retrace, which is perfect. The market have actually just closed right now at 5 o'clock. So this is perfect because we broke and closed above structure, and now we're retracing back into structure. Now, at this point, our job is, I won't say our job is easy, but it's easy and hard. But our job is to catch this pullback, right? Both hands, catch it, and then look for opportunities to trade it on the way up. So the concept is really easy. Wait for price action to pull back and then trade it up. However, actually doing it could be pretty difficult, because the biggest question that I get from traders whenever I share opportunities like this is, okay, Akil, where do I look for it to come to? Well, in all cases, what we would do is we would measure out a kill zone. Our kill zone is going to be from our previous new structure high to our outside return, which is technically down here, but let's just take this area right here to make it a little smaller. That still doesn't really help us, right? So this is where having rules comes into play. If you have an indicator-based rule, that's why we did a really good lesson on this in the live room about different indicators we can use. Maybe I'll bring one of the ideas up for you. But if you have indicator-based rules, meaning indicator has to cross or indicator has to go oversold, right? That is the first trigger that you're looking for. So if indicator does thing that you need indicator to do, then look for your entry reason, whether that is the indicator or whether that is price action. So for example, if you are a fan of the RSI, this is the RSI, the relative strength index down here. Here's a simple way you can get involved, which is rules based. You can say, as price action pushes down, look for RSI to go oversold. If RSI, so that's step one, check. If RSI goes oversold, then look for higher high, higher close entry. If get higher high, higher close entry, then enter the trade, right? So now that annoying question mark is deleted, because this is completely rules based. There's no if, ands, or buts of what you need to do, right? You're just following your rule. You're sitting back, you're chilling, you're like, okay, waiting for the retracement, got it. Need that RSI to go oversold. Oh, there we go, oversold. All right, need a higher high, higher close. Did we get it? Yep. All right. Oh, we got it. All right. Time to buy, right? It's straightforward and simple. And the cool thing about that as well, especially even on an hourly time frame, is that this isn't going to happen in one bar, right? So you have plenty of time to think about it. You have plenty of time to redo your analysis, dot all your I's, cross all your T's, because not only does price action have to come down, but then it has to go oversold. And then after it goes oversold, you need at least 2 candlesticks to get involved. So you've got hours ahead of you. So that's one reason right there. Another one that we spoke about in the live room this weekend was maybe using an indicator-based entry. We did a video on moving averages here on the YouTube channel, but let's use a stochastics because this is my second favorite indicator, but this is also the one that we use in the live room, where if you're not comfortable using like a higher high, higher close, you can use an indicator cross. So here on my stochastics, I'm gonna make this bigger for you so you guys can see. I'm gonna make it more Christmas colory because I have an association with green being good and red being bad because of how they trained us since we were young. But the green line is my K, the red line is my D. Pretty much what you can look for is this if you want to use the stochastics as an entry technique. As price action pushes down, right, these lines are going to travel down as well, right, just like we saw over here. An entry reason could be, right, price action or stochastics, excuse me, has to go oversold below the 20. And then you can look for the K to cross the D, and that can either be a signal for you to enter the trade right away, meaning as soon as that happens, I enter the trade, or once the K crosses the D, then I look for whatever price action reason I need. And there's endless ways to do this. I can stay on this simple indicator for like a million years, probably not a million years. I would die at that point. So I would die before ending the ways that I can show you how to use this indicator. That's not an embellishment. It's true. I've done it before. But I just want to give you guys some different options on how you can trade, especially if you're someone that is less maybe discretionary, more systems based. And again, just a real quick example of that stochastics cross would be let's look just any of these places on the bottom here, but you can see, here we go, right down here, K, the green line goes oversold, so does the D, and then we cross right here. This could be your reason for entry, right? So just different options to do it there. I want to keep going. You can do some fun stuff with the RSI as well, but let's leave it at that. So anyway, Looking for a pullback here on dollar Canada into this entirely too big of a zone, and then looking to ride it up. I forgot the level already. I think it is 139.50s is what I had in my notes. But let's just actually see something real quick. So I'm gonna go back. Sorry for staying here too long, guys. I just want to go back and do this analysis. 4-hour chart. I do these things live, by the way, if you guys are new. These aren't like rehearsed and pre-recorded. I kind of have an idea of what I want to look at, but then I dive in and do the actual analysis live with you because it's the best replication of what we do in the live room. By the way, if you ever want to join us in the live room, told you a plug was coming at some point, check us out, www.tier1trading.com. We have a London live room. We have a New York live room. We come in, we analyze the charts, we trade every day. You get to share that time with a community of traders. If you are lonely out there or want reps in the market or maybe a little bit of both, check it out. It does come with your 14-day risk-free trial membership. So yeah, there you go. Risk-free. Do it. All right. So let's look at this zone right here. And we know that our volume spike came there as well. I just want to do one more thing here with a target projection. Two more things. Sorry, I lied. One more thing. Sorry, we can't do the second thing yet. One, I want to take a Fibonacci extension from my swing low to my swing high right there and back down. And oh, look at that. Yes. As expected, 127 Fibonacci extension, which is the first extension level I would project price to go to, right at that structure box. Coinkydink? I think not. I do want to do one more thing. I can't really do it because we don't have the retracement yet, but if we take a look at our previous extension, this swing low to this swing high right here, and if I copy and paste it, I'm brain farting, there we go. You're gonna see that it gave us, nope, I thought it gave us an equal measured move. Okay, we're gonna look for 3 J's. I'm looking for an equal measured move. So what I would do is I would take the length of this move right here, and I would drag it on to whatever that retracement is and see where it lines up for more confluence. Now, I don't know where that retracement is going to go to because it just started. We can maybe do a little bit of a projection and say if the price is moving harmonically, we can retrace back to this level. This is kind of like a backwards AB equals CD pattern, and then bring that one on to there, and that lines right up with the 127. It's beautiful, but these are just projections. We don't actually know until it happens. But if you're someone that kind of wants to do analysis beforehand, this is certainly stuff that you can do to just gain more confidence in your trade. All right, I need to get on to another pair because we're going to be here forever if I don't stop. Lastly, if you're still around at this point, and awesome job by you if you are, it means you're serious about your trading. We're going to be looking at the euro yen. I'm not going to take you through the full euro yen story because I think we've looked at this pair every single week for like the last 2 months, and I always show you that way back in the 90s, right, we have weekly structure, which is where we're shooting for, so price can go higher. So what we're doing now is we are retracing. We're seeing some yen strength as it's been a wacky week for the yen, and we are coming into a very important point, right? If price action is going to hold a level, I think this is the level that it's going to hold right here. Not only do we have a nice little structure zone right here, meaning this was the place where price action pivoted from a short to a long, but if I drag my box out to the left, we have a nice little structure swap or an ice zone. And the ice zone means this. Price action came up, we found resistance, price broke through resistance, we came back, we found support. So this level has been tested on both sides. Again, the idea between ice zone, thanks to Peter Brandt, was like imagine structure being like a piece of ice. On top of the ice, we have human beings walking, if I can find one, dancing perhaps, and the ice supports them. Get it? Support, right? As price comes down, it is support. Oops, not a random dancer there. It is support. On the other hand, on the other side of the ice, on the bottom, we have fish somewhere, mermaid, I guess that's close. We have fish that swim, mermen, underneath, and this level of ice works like resistance. It stops them from getting above. So a nice little ice zone where it's support on one side, resistance on the other side. So regardless of funny dancers and mermen, this is a pretty cool level to keep an eye on. And if you are looking for longs, as we go down to the 4-hour chart and we get a little dancer out of here, this is an area where I would be looking for price to come to. You can see RSI has been Really oversold. Just to give you guys some perspective, the traditional oversold, or the default, which not going to get on a rant, but default setting of your indicator is not the best setting of your indicator. Just don't fall into that trap. They don't tell new traders that, so I've got to, right? But the default oversoldness is 30. My personal oversoldness, because I'm special, is 20. We are down at 13, so we are really, really, really oversold. We also did an RSI swap, meaning that this retracement right here has gone directly from an overbought condition to an oversold condition. We have one more thing happening here, if you guys can see it. We have hidden divergence, meaning that we currently have higher lows on our price chart and we have lower lows on our RSI. So we've got a lot of things that are indicating good opportunity for a buy. Real quick, for you guys that are interested, this happens too. Again, won't go down this rabbit hole, but I'll just draw this. I'll just stay silent and draw this on for you. Kind of cool, right? The RSI is my favorite indicator because you can do so many things with it. I won't take you down the rabbit hole, but I would say this. If you ever want more information on the RSI, this is a good book that you should never, ever read. It is one of those things, like, we think it's cool to like play that Ouija board and summon ghosts because we'll get to do all these cool things and we're curious about it. But as soon as you summon the ghost, they haunt you for the rest of your life. That is this book. So Akil, if it's such an evil book, why are you telling me about it? Well, because I have been haunted for the rest of my life. Misery loves company, so I want to see if you want to be miserable as well. Join me in this RSI hell. Come on, it's warm down here, right? Anyway, it is a cool book for learning alternative ways to use the RSI, but if you're a new trader, stay far, far away because you'll get information overload by looking at all of this stuff. But if you are an advanced trader, again, this is just a cool way to show different ways to use a single indicator, right? You don't need a million indicators on your chart. Just have one or have two and be really, 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 really good at how you use those one or two. Now, next up is going to be the dollar rupee. Ooh, that rhymes. So I didn't do that on purpose. And yes, I know what you're thinking. Keel, I have watched your videos every single week for the past, I don't know how long I've been doing it, decade and a half, and I have never seen you look at the rupee, and you are 100% correct. But what I do every Friday is I put it out there on social media. I say, hey, is there anything you guys want to take a look at in the video? And this was one that was shot into me. So we are going to look at the rupee. More, I'm going to stop doing that, all right? So this one is actually very fundamentally driven. The technicals back it up as well, but fundamentally driven. You see, there's a lot going on in the US right now. There are new Fed chairs that are going to be appointed, perhaps. There's a current Fed chair that is not going to leave entirely, that is also under criminal investigation. There's a tariff thing that is in the Supreme Court right now, and they keep telling us they're going to give us a ruling, but they keep pushing it back. And there are more tariff threats while the original illegal tariff thing is being looked at, about countries that are being nice or playing nice with Iran. And Trump has said, hey, if you are friends with Iran, this is so petty, right? If you're friends with them, I'm not going to be friends with you, right? If you are friends with Iran, then we are not going to be friends with you, and you are going to get hit with tariffs, right? And unfortunately, I don't know how to say it, India, well, that is one of Iran's biggest trading partners. So along with dollar strength from the actual positive news that we had this week, surprisingly, there is a potential fear of India, because of the potential punishments that our president may lay down on him. So just keep that in mind when you want to measure the strength and weakness between these two currencies. Now, from a technical perspective, here's what we have here. I would love it if we were a little bit further away from these highs, but I would expect that we continue to test these highs. It wouldn't surprise me if we continue to test these highs, mainly because of the fundamental background. But we may take a little bit of a breather before doing so. So as you can see, similar to dollar Canada, we have rallied up to end the week. And then we've started retracing a little bit as we close down for the day. Now, the question is, if we are going to retrace, where are we likely to retrace to? And there's two levels I want to pay attention to. One is going to be right here on the 4-hour time frame. You can kind of look at this zone of a structure shelf between this area back here in mid-December and this area that we just broke out from. Again, more specifically, this zone right here. So if price action can retrace to that level, I think that is an excellent place to buy it up. Again, I'm not too sold on the amount of continuation that is there, but we're analyzing this under the premise that you have a bullish bias on this pair. Another area that you want to pay attention to, one more time frame lower, if you want maybe a quicker reason to get involved, would be this area right here, right? We had this kind of weird pregnant pause rejection deal. I'd be curious to see how price action reacts as it comes into this zone. Now, obviously, you want to wait for a reason for entry. I don't think this is the area to be aggressive at all, but if you can get a reason for entry right here, this could be another place where you can put an order on. Or if you trend continuation traders out there, maybe split your position, right? Maybe put on a partial position right here to get yourself a little bit of exposure in case price does reverse at that level. And then maybe add the rest of your position if price action comes here and look to ride it up. So again, overall, not wowed by the bigger placement of price, seeing that how we almost tested these highs. We technically didn't do it. I know we almost tested these highs, but working under the circumstance, or working under the idea, that you do have a bullish bias because of the fundamental reasons, this is the opportunity that I would look for on this pair. All right, back to the stock market. I told you I was bouncing all around the place this week. We're going to look on the NASDAQ. The NASDAQ prediction we had last week worked out perfectly, which was awesome. Let's see if we can do another prediction here as well. A little bit of mixed week in the stock market as well, but again, there's a lot going on out there. So what I'm looking for here on the NASDAQ is going to be a bullish continuation play, working under the idea that we're going to break this level and we're going to retest highs and we're going to start getting some new highs. And the thing that stands out to me is this. We have put in a series over the last 3 months, right, of lows, higher lows, higher lows, higher lows, forming something like this. And if we are going to continue that series of higher lows, it's only a matter of time before we break out to the upside. Now, as you go down to the 4-hour time frame, you're going to see, right, this is one of those things where you pause the tape and see if you can see what I see. I'm going to filibuster to give you time to hit that pause button, like, subscribe. All right, I got to show it to you now. We have a potential advanced pattern formation forming. If I start drawing or measuring out at this low, this swing low to swing high, and I take my Fibonacci retracement tool from that same level, swing low to swing high, you're going to see that our retracement here, these two red candles, comes down to the 50% level. That's going to put us on alert for something called a bat pattern. Now, the bat pattern completes down here at the 886, so the entirety of this pattern looks something like this. Swing low to swing high, X to A, retracement A to B, failed extension B to C, and then a move down here to our 886, which would be our decompletion. As you can see, that decompletion comes right at our previous level of structure, which should work as our safety net if price is going to continue to respect these levels of structure. Now, there is the thing, Keel, we're putting in higher lows, right? What if price doesn't get down that far? What if it reverses before it? Well, you answered your own question. Then it reverses before it and you delete your charts and you can't get involved. There's nothing, I don't know what to tell you, right? These are the rules of the pattern. If you learned anything from the video I shared a few on our 3 yen trades, we got to follow our rules, right? But this would be a nice entry reason, an aggressive entry reason to get involved in a long opportunity. And if you're someone that was looking to be long anyway because of that bigger potential breakout, well, you just got your excuse. You're welcome. All right, next up, we're heading over to the Aussie Canada. And guess what? The Aussie Canada is consolidating. If you are someone familiar with this pair, it's funny because that is what this pair does. But surprisingly enough, we actually saw some pretty directional action out of this pair, which is weird. And after that directional action, we decided to consolidate once again in this flag pattern. Now, I told you guys I love these flag patterns, but I also told you guys the what is never as important as the where for me, meaning that the location matters most. And the problem I have with this is that you can see if we measure out this flag and look left, it comes right at a previous level of structure. So from my personal trading perspective, I can't predict a move higher until we violate this level. Now, if we do violate that level, there's a good place that we can run to back here from early 2023. But until that happens, I can't predict a bullish move. But if you listen to the last Trading Coach podcast, we talked about how although you should take lessons and wisdom from my extremely tough and rough and very depressing journey to becoming a successful trader from a struggling wannabe, you don't necessarily have to trade the same way that I trade. So if you trade flag patterns in their own right, or if you don't value structure the same way that I value structure, or if you just have maybe a bigger directional bias, maybe based off fundamentals or whatnot. We've seen Canadian weakness this past week. I haven't looked up why, but we've seen it. This is another opportunity to establish a long position prior to a breakout. And as we go down to the lower time frame, you're going to see that we've been bouncing back and forth and back and forth and back and forth. And if we get another bounce back to the low of our channel here, it's a very low risk opportunity to get involved, meaning that you can establish a position down here. You know exactly where you're wrong at, so the risk is going to be very low, and the reward playing for that breakout is going to be very, very high. So although not a grade A trading opportunity, not an opportunity for me at all, it is certainly worth keeping an eye on for you guys interested in this type of trade. Now, just to continue on Aussie trades, I did get a question about this one. This was a trade that we looked at in last week's video. This was the head and shoulders / cipher pattern, if you remember. And I got a question as price action did nothing but go sideways all week. Is the head and shoulders still valid? And I think this is a really good question because it's very common for traders to expect the market to sometimes move quicker than it sometimes moves, right? Sometimes the market moves really, really fast. Sometimes it kind of bores you to sleep before moving fast once you are asleep. And the question of is it still valid or isn't it valid is a good one. And it all comes down to kind of the basics, right? These are, we have introductory courses on our website called the Foundation Series, where before we get into the actual strategies, we talk about the basics of reading a price chart, the basics of reading price action, the basic rules, right? And one of those rules is understand the important point, right? Understand the decision point in the market. And in this particular pattern, the decision point is going to be right here, whether you're just looking at this as a structured trade or whether you're looking at this as a head and shoulders pattern. Either way, this is going to be the decision point. And what that means is that market can do whatever the hell it wants. It can go right forever. It doesn't really matter. What matters is if we violate these lows. So it's very easy to get fooled and think this thing is invalid because it didn't do what we expected already. It's very easy to kind of fall asleep and forget to check on it. But what we want to do is we want to mark the important levels, which is going to be right here. And we just want to wait until that level is tested. And then once it is, and then we move forward with our trading opportunity. So yes, this is something that is still on the radar. I am still looking for a head and shoulders top, which would mean a bearish move here. And we'll continue watching it until the market tells me otherwise. Next up is going to be the Kiwi, the New Zealand dollar. We're going to be here on the 4-hour chart. We're going to go back to simple advanced pattern formations. Not that they're simple, but they're simple as far as analysis goes. And we have a potential deep Gartley pattern here. My starting point is going to be right up here. This is my clear swing high to swing low. You can see price action comes down. It does a little bit of a dance right here. We push up, and then we go directly from here to here. A very nice impulse leg. I want to take my Fibonacci retracement tool next and measure it from the high of that leg to the low of the swing and ask myself what Fibonacci level was hit. In the previous example, which I already forgot what pair we were looking at. Where's my notes here? Whatever. We were looking at a bat pattern, which means it hit the 50% mark. The NASDAQ, there we go. This one, we hit the 618, which means we are on alert for a Gartley pattern. So my next step is I want to take my Fibonacci extension tool from that A leg, the swing low, to that B leg, the one that hit the 618, and back down. And for me personally, I want to look for a Gartley pattern that completes at a zone between the 127 extension and the high of our X leg. So this is going to give me a potential pattern formation that looks like this: X to A, swing high to swing low, A to B, our first retracement, B to C, our failed extension there. I kind of double clicked by accident, so let's do that again. A to B, more reps, more reps. There we go, B to C, and then a CD completion up here. And this would be a potential bearish trade. I don't think there's any bearish bias here. If I remember with New Zealand dollar, yeah, shuffling sideways. So not any type of extension play with this, but a cool advanced pattern formation opportunity. So that's it for this week, guys. Like if you enjoyed it, subscribe if you're not subscribed already. That way you don't miss next week's video and all the other random videos that I do throughout the week. And once again, I did get a question about trading computers and asking me what should be included in it. And I will tell you, I don't know, but I will give you a free resource where you can find out. Scan the QR code. It's a free trading computer builders and buyers guide. So if you want to build a computer, you can have them build one for you. I've got both of my machines in my trading career built by them. Or if you just want to learn what needs to be included in it, anything from monitors to hardware to software, it's in there for you. So check it out, and it's free. All right, until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is